Okay, we got the tech tariff rally today. The Dow up 312 points, 0.78%. The S&P was up 42 and a half points, almost 43 points, 0.79% higher. The NASDAQ rose by 0.64%, up over 100 points. The Russell was the best performer of the day. It was up 1.11%. Whoa, they just refreshed it. It says 2.70. I don't know if that's right, but they just refreshed it. The VIX was down 17.76% today. The VIX was down 30 points. The VIX is predicting that in the next 2 days we'll have a down day on the S&P 500. VIX did lose a 10-period moving average today. We had the tech rally, big rally on Apple and other tech stocks as Trump exempts tariffs on iPhones. Talked about this in the Sunday video over the weekend. The president announced exemptions for phones, computers, chips, and other things. Again, another tactic. I think this is designed to get the tech sector in the stock market to rebound back up and lead the market higher. Fear greed index is going higher. It's still at extreme fear at 19, but it was at 4. And then it went a little bit higher than that. Friday it closed at 12. Now we're at 19. So again, we're going to be watching to see if we move out of extreme fear, if we can build upon the rally. Last week we got the AAII sentiment survey, and it came in at 58.9. Again, dropped a little bit lower than the 61 reading. We've been, again, hovering near the 60% level for the percent of bears. We did see the percent of bulls pick back up, 28.5%. Remember, last week on the launch of the reciprocal tariffs, immediately paused them and brought it down to 10% for trading partners except for China. Find out that we have even more countries that are process of negotiating, and again 130 countries now that was cited over the weekend in news reports. The EU now coming to the negotiating table. That was announced by the White House. Trump tweeted something about that today. Should say had some kind of social media post, whatever they call the post at his social media site. Nevertheless, I digress. Again, the 90-day pause, and then now we're getting the exemptions for tech. We're getting these recovery relief rallies. The S&P was up at much higher levels at the highs of the session. We gave back about 50 points of the rally. We still ended up over 40 points higher, but we gave back over half of the rally from the highs. Got a black candlestick. Again, watching closely. We're above the 10 period, the red line right here. This is the bearish count, and I think there are two possibilities here, really, with the sell-off. You're either getting a 5-leg push down or you're getting a 3-leg push down. Invalidation for the S&P 500 would be a push above 55.04. We didn't get that. Today's high was 55.50 or 54.59. The previous peak over here from that historic rally that we had when Trump paused the tariffs on the very launch day, we were up about 9.5% or so. Came in at 54.81. So again, a push above this 55.04 area would invalidate this as 5-leg structure. A push down would still open the door to the bearish count. Now, as we've had this rally back up, we're now getting the death cross here today. I'm going to be watching to see what happens. Do we end up dropping back down? Pull back? Do we drop back down, try to take out this low, pull back, or do we try to go up and clear this area and get back above the 20-period moving average like Bitcoin did, the declining trend line like Bitcoin did, the declining trend line I'm referring to from this peak here to this peak right here? Do we go up there? If we do, it will invalidate the bearish count. Get a death cross today, the 50 here crossing below the 200-period moving average. Again, sometimes the death crosses are associated with bottoms. Either the bottom is already in sometimes, or you get it right after it. Sometimes it can lead to a bearish phase like what we had in 2022, or a bear market like what we had the financial crisis and the bursting of the tech bubble. Watching to see which one this is. We're going to recover back up to fill these gaps. We've filled this gap. This gap we have not filled yet, and that would take us closer to the 200 and the 50 period moving average. So again, a black candlestick, possibly a bearish candlestick with the black candlestick we'll be watching. The VIX is predicting down day for the S&P 500 either Tuesday or Wednesday. We'll be watching to see if the MACD can get a bullish cross, if we can see the histogram go into positive territory there. We'll be watching that. No diversions here. No diversions here on the RSI. The RSI still could end up forming one. We'll be watching to see if this count gets invalidated. This is the bearish count. And in order to have the bearish count, you need the 5-leg push lower. And again, that's what I have marked here. Means we'd have to see another sell-off to take out this low if this is in fact a wave 4, a 1, 2, 3, 4, and then we get a 5. Still have a 3-leg push down, but here I have the bullish scenario. This scenario says that we're not done peaking yet and that we completed intermediate wave 3 here. We now have an ABC structure that is either completed intermediate wave 4 or about to. Even if we get another push down to a new low, it still might be part of this structure right here, because it could still have a 1 for this wave C, a 1, a 2, a 3, a 4, and a 5 if it's not done yet. So again, that could be the larger A, B, C structure. So even if we move to a new low, it's still possible. It's part of the C wave. So we're going to have to be watching closely. If we get a bigger rally and we get back above the 50 and the 200 period moving average, do we establish a lower high or a higher high? But we'll be watching to see, does this low hold? It was a bullish hollow rig candlestick here for the S&P 500. Again, it still does look like a 3-leg structure, so we'll be watching closely. If we end up having a bottom already or getting one more push that's part of the wave C, again, it should be followed by a 5-leg push higher that should go on for a little while. It can go on into the summer months. If it drags out, it could go on into, August or September, on into the fall. Count says either we've already bottomed here, completing intermediate wave 4, or we get one more push down to complete the wave C and a 5-leg push lower for intermediate wave 4. So this is the bullish count. The other was the bearish count. Mark that here with, if the bottom's in, we possibly have either a truncated fifth with the wave C where we have 1, 2, 3, 4, and 5. The possibility is that this just completed it and we're now done with intermediate wave 4 over here rather than here with the truncated fifth. Either way, I'm going to be watching to see, does this low hold? Do we go back to try to take out these lows here? Going to be looking for clues. There's more work to be needed to be done if we're going to see this turned around. We got to get back above this black line right here, the 200 period moving average, and then the 50's got to get back above it. If we, again, push above the 5504 level, that would invalidate the bearish count, likely mark the low over here as a bottom. So we'll be watching, do we come back or not? If we have bottomed with one of those other scenarios, again, the rally has to continue to get back above that 200 period moving average if we're starting our first minor wave of 5 waves of intermediate wave 5. Do end up going lower and testing the lows and taking them out. You could still end up forming a divergence. Here we had a confirmation of a higher low. But really, the RSI doesn't look at the shadows right here, so really it just kind of looks at the closing bar. So you actually have a divergence right there if you exclude the shadows. Push above this low right here, which we haven't got on the S&P, but we did get on the NASDAQ. That would suggest that the low in here is in, the bottom is in here. You've completed a wave C. Push above this level would invalidate the bearish count, marking this as an ABC correction rather than this as a wave 4. So just some things to be paying attention to. Again, I don't trade L8 wave, but I try to use it to validate or invalidate price fluctuations, directional moves. So again, going to be watching, can we get back above this 200 period moving average? NASDAQ got a black candlestick right at the 20 period moving average. Again, we're getting the death cross here. MACD got a bullish cross today. Histogram moved positive. S&P didn't quite get that, but we did get it here on the NASDAQ. It did move to a new low here. You don't have to form a divergence, but you certainly can. And again, the same is true for the RSI up here. We've moved to a new low. Do we get a divergence? Do we just see these extremes mark a low? Right now, you still have a three-leg push down. If we're going to test the lows, we got to get rejection here at the 20 period. You did get a black candlestick. Can sometimes mark a pullback or a reversal. Same is true for the NASDAQ. It came just under that 200 period moving average. The 50, it's above it, turning back up. We'll be watching. If we pull back, we've got the cloud of support here on the 60-minute chart for both the S&P and NASDAQ. On these 60-minute charts, we have the hollow red candlestick here on the 60-minute chart. We got the higher low, and again, now we're back above, testing our above the 50, testing our 200 period right here, and then again here with today's session. So again, we'll be watching to see can we get back above these 200 period moving averages. Gaps back over here to be watching. Gap from over here in early April. Haven't quite filled that gap yet. We're coming up to it. NASDAQ coming up to just underneath that trend line. S&P is a little bit further away from it. S&P didn't get as close to it, but here we are right at that trend line. Underneath it, stalling at the 20 period, getting a black candlestick as the MACD gets a bullish cross. If we can get a bigger rally, got to break the trend line and try to move towards the 50 and the 200 as they're getting the death cross now. And then eventually we got to see the RSI push back above 50. This is going to end. We dropped below the 50 period, the green line right here. We dropped below the 50, and again, we saw the RSI move below 50, so you got a 50-50 sell signal here still in play in the daily time frame. You got to be able to break the downtrend to try to change that. We get rejection here, then again, we'll be watching this low. Remember, right below these lows that we had our 200-week moving averages. I talked about that last week. We may not reach them. In 2023 with the sell-off, we didn't hit the 200-week moving average. I've shown you that other times in history we have hit it, bounced off of it, and it created a major bottom. This current bull market, we're not in a bull market, we're in a bear market. We've dropped more than 20%. Percentage moves do not define bull and bear markets. You got to drop below the 200-week moving average and then stay below it. That's going to define a bear market. We haven't been able to do that. We've had drops below it, but we haven't been able to stay below it. And again, sometimes you test it and bounce the 200-week moving average. I've talked about that over the previous week quite a bit. Now, I want to continue to point out that NASDAQ has already invalidated a four-leg push. If this is a wave 4, it's invalidated it, because if this is wave 1 from our peak and we have this low right there, again, we've already moved above it. It's already been invalidated. We ended up closing just right underneath that level, but we had an intraday push above it and we closed right at it. It's already invalidated this as a wave 4. Because wave 4 and wave 1, they can't overlap. Now also, NASDAQ has already invalidated the C wave as this is a wave 4. If we have 1, 2, 3, and this is 4, well, you've already had an overlap of wave 1 and 4. So it's invalidated this as a wave 4 for this being a C wave. It's invalidated this as a wave 4 as this being a wave 1, 2, and then a 3 wave followed by a 4. So again, I think the odds are starting to increase that we have a 3-leg structure lower. Black candlesticks, again, if we go and sell off, still may see NASDAQ and S&P diverge, often do at turning points. They don't always do, but they often do. So again, we'll be watching to see what happens here. We're stalling at that 20-period moving average here on the NASDAQ as we get the death cross. And again, we'll be watching, can we claw our way back up to the 250 there as the death cross happens? Can the horizontal support levels I've talked about hold? When NASDAQ's already invalidated it, we'll see if S&P does or not. And we'll be watching this low, should we sell off? Now, both the S&P and NASDAQ came down to horizontal support. Bitcoin did the same thing. They came down to the previous peak over here from the 2022 high. That's where we found support, and we got that big rally last week. We actually rallied up over 13% from the low to the high, even though we were only up, what was it, 5-something%. We had dropped to the lows last week at horizontal support, and we rallied up 13% off of that. We're going back up with today's start of the week here, and we have a short trading week. You've got Good Friday on Friday, so the market's only going to be open for 4 days, and then Friday it will be closed for Good Friday. We slightly breached this trend line, as trend lines often change, trend lines often expand. I talked about this trend line being broken over here at the 2023 low. I've talked about this trend line right here being broken and coming back down a little bit lower there with the July sell-off from 2023, or I'm sorry, in 2024. Things change. So again, is that what we have here? Again, complete a three-leg structure down, you have an ABC move. If you end up going lower and C's not done, or you end up getting a 5-leg structure, you have our 200-week moving average here. I talked about that. You got to take out the 200-week moving average to move into the bear market. If this is a bear market, we sold off here in 2023. We didn't take out the 200-period moving average. We bounced off of it, slightly taking it out in 2022. And I talked about that. In the past, in this bull market, bottoms have formed around the 200-week moving average, just above it or at it or just below it, but you got to stay below it. Much bigger sell-off. Can we get a recovery and end up getting one more push higher? I think that is likely going to be the case. Market is going to start focusing on tax cuts. We're now in earnings season, so we'll be watching that, but at the uncertainty surrounding the tariffs, do we now start getting a relief rally, end up getting some good tariff news? I'll tell you, if China ends up coming to the negotiating table in the not too distant future here, we'll probably get a big rally with that. We'll see what happens. You're watching this low, and if you take it out, you've got your 200-period moving average just below that, directly below that, coming in at 46.86, 46.86, so just under the 4,700 area. So again, we'll be watching to see, does this horizontal support level hold? This is the bullish scenario for the S&P 500. This says that, hey, we're completing intermediate wave 4, and we're about to get intermediate wave 5, and then we're going to see a top in the market. Bearish Elliott wave count says, nope, we've peaked right here, and we're getting a wave 1. In order to get that wave 1, you got to have a 5-leg push lower. We don't have that yet. We have 3 legs down. So again, if we go higher on the S&P, it's going to invalidate that. You're going to have an overlap if this is wave 1, 2, and 3. Overlap with wave 4 and 1, validating the bearish count. NASDAQ's already done it, but if S&P goes lower, again, they might diverge. We'll see what happens. But this is the bearish count, the S&P 500. Anyway, just going back to my chart here with the bullish count on the S&P 500, again, we're getting the stochastic recycling back up now. So again, we'll be watching to see, can we build momentum, build upon momentum, and try to go back up to the 200 period and the 50 in the daily time frame. Do we try to go back up to the 50-week moving average here, the 20-week moving average here in the weekly time frame? The NASDAQ also is getting the bullish cross with the stochastic. I keep saying we might end up forming a larger divergence here on the RSI before all is said and done. You ended up doing that in 2007. Had a bigger drop here, but the moves in this bull market have been more exaggerated. Oh, this isn't a bear market, or this isn't a bull market. We've dropped more than 20%. Well, we did over here. It wasn't a bear market. Dropped 35% in 2020 in 3.5 weeks. Was that the shortest bear market in history? No, we've had 4 times. This is now the 5th. 4 times where we've dropped 20% or more. 2011, 2018, 2020, and 2022. All of those cases, we dropped 20% or more. Larger bull market. Could see it here. We've seen it 4 other times, and we still have recovered to new highs. We have a massive topping process here. Don't rule that out happening, a larger divergence on the RSI. NASDAQ weekly chart, again, the stochastics recycling back up here. Now we're getting back above 20. This is what we saw at the 2023 low. This is what we saw at the 2022 low. So again, do we have a bottom in here? We hit horizontal support. Now from the S&P peaked in January 2022. NASDAQ peaked in November of 2021. Just before that, they ended up diverging at that top, by the way. But again, we're right back at that support level. So again, do we find support here? Now at our 200, we have this horizontal support level, our 200-week moving average. Again, in 2023, we didn't reach these levels at the 200. In 2022, at the low, we moved just beyond the 200-week moving average. We don't have to reach it. If we go lower, we still may. But again, if we could start seeing a recovery, more and more signals turn bullish, we might make an attempt to try to go test the 200 period moving averages and even get above them with the S&P 500, like we did in 2000, like we did in 2007, where you end up getting back above the 200 period moving average in an overall topping process. Again, we've had this divergence. It's given us this sell-off. We've recovered. Last week, we recovered from the lows by over 16%. Now we start this week off. We're going back and testing those intra-week highs from the previous week. So we'll be watching. Can we go higher? Do we test this 50-week moving average? Do we test the 200 in the daily? Can we recover? But again, the risk is we still come down to these 200-week moving averages. Could bounce here. If we end up trying to go lower, this is the area you would likely bottom out at if we did move to a new low, and we may not, because like I said, we're at horizontal support on both NASDAQ and S&P. Bitcoin did the exact same thing. Back to the level that was the previous high. Okay, that's exactly what Bitcoin did. S&P did it, coming back to the level that was the previous high. Can we recover here? Through the run-up, Bitcoin has done that over and over again, pulling back to the previous peak's high. Got the S&P and the NASDAQ doing it. Tried to rally back up, and NASDAQ and S&P followed. My latest Bitcoin video at the end of this video, I'll link it at the end of this. It's the bearish count for the NASDAQ. This count says NASDAQ's already peaked, and we're going to end up getting a 5-leg push lower. We've broken the blue trend line, the rising trend line of support there, and it's going to stop making new highs. This is the bearish count saying that we've completed the top. Bullish count here for the NASDAQ saying, nope, this is an ABC move. This is a 3-leg push down. And again, we're going to end up moving to new highs. And then we're going to top. And again, that could take us on into the summer months. Again, we could see fears about tariffs calm down. We could end up seeing a focus on tax cuts, hopes of rate cuts, or whatever. Fears of recession could begin to go away. This is the bullish count saying we haven't peaked yet on NASDAQ. So I'm going to show you those longer-term Elliott wave counts. Please support the channel with the link directly below. If you like the charts, you like the indicators, let me know that by supporting the channel today. I don't have any sponsors, just a direct relationship with you. So if you would consider partnering with me, I would really, really appreciate it. Just follow the link below. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Most YouTube channels want to get sponsors. That's how they make their money. I choose not to do that. I thank you for your consideration for that. The S&P 500 got our first green bar on the awesome oscillator there on Friday. We get our second green bar today. The risk is we still end up forming divergences on indicators like the MACD, the RSI, and the awesome oscillator. The other possibility is we just get green bars, and we bottomed with these extremes. We start seeing the MACD going up into positive territory, the awesome oscillator going into positive territory, and we get a big, big recovery just under the 20-period moving average. NASDAQ stalled at it. That's a blue line right here, but we're above the 10. You got to get back above the 20 and flip the cloud here back to green, the bars back to blue to get a bullish reversal of conditions. The last one we had gave us that rally back up to the 200, but we got rejection there. So again, got to be watching. We just bring this up a little closer so you can see it. Got to be watching. Can we clear the 20 period, or do we get rejection at it? If we can clear it, you get a bullish reversal of conditions, and we're likely going to try to test the 200 period and the 50 as we get a death cross, and we have this gap fill right up at that area as well. So again, that's an important gap to be watching. Again, it would cause us to recover from Trump's Liberation Day. We had that sharp move lower, we're getting this rebound back up, but we need to see things turn back to bullish here. We need to get the green cloud and the blue bars. So we'll be watching. This risk is we still end up forming a divergence here, but we may not do that. You don't have to form a divergence, but you can. S&P daily chart here. Quickly, the weekly chart, you got to be able to get back above the 10-week moving average, a red line, back above the 50-week moving average. We took that out. Our 200-week moving average, again, if we can get green bars going forward, you can get a recovery. But then in order to be able to make new highs, you got to flip the cloud here in the weekly time frame back to green, the bars back to blue. We had these negative divergences, and they have given us a sell-off. We're above the 200 at horizontal support. The 200, again, at that 46.86, 46.86, 87 area. Same thing for the NASDAQ weekly chart. Again, if we're going to recover, got to get back above the 10-week moving average red line. 200-week down here, 15,768. 15,768 is our 200-week moving average. We're going to need to see green bars if we're going to try to get above that 10-week moving average. We'll need to see the bars begin to flip back to blue. That could still give us a larger divergence, coming back up here and then going into the summer, attempting a recovery. An oscillator, MACD moved to new lows on the NASDAQ daily chart. We're just under the 20 period. We just below the lower boundary of the cloud. If you can clear it, then again, you can get a bullish reversal of conditions. Blue bars, green cloud. Last time we had it, it was a counter trend rally. We stalled at that 200 period moving average. When we turned at the top, we turned bearish over here. And again, attempted to flip the momentum here. It failed. And now here we are. Do we flip it, move back to test the 250 as they get a death cross, or end up going down and testing these lows for a higher low or a divergence? ACD getting the bullish cross today. S&P is not there yet, but we got it on NASDAQ. The tech rally with the exemptions, with the tech tariffs announced over the weekend. So we'll see what happens from here. NASDAQ 100. Bars, but they got to move in positive territory. The risk is you get a higher low, or which testing the low, getting a higher low, or try to take it out. If you do, you've got your 200-week moving averages. Low are recent lows. Again, the risk is that we still end up forming divergences in the daily time frame and our intraday charts. And again, got to see things turn back to green if we're going to end this. Here, we're still red and still in negative territory. So the risk is we come back and test these lows. Unless we can flip these signals back to bullish, then the risk is we set up another higher low or try to take these lows out. If we do, then the 200 period moving average in the weekly time frame then comes into play. We're at major horizontal support, bouncing off of it last week. This is going to end. We've got to see signals in the daily time frame and in the intraday time frame all begin to turn back to bullish. The red here all has to go away. We've had red candles ever since the reversal up here. Momentum tried to flip right here. The trend has remained bearish ever since our reversal right here after the February peak. So again, those remain bearish. Bitcoin's come up to the trend line, the downward trend line. NASDAQ's just below it. S&P is still far away from it. This is the downward trend line I'm referring to. Again, things are still bearish right here, so you got to flip everything back to green if this is going to turn around. Got a recovery up, but signals are still red, still bearish as we're getting this death cross. So right now, again, if we just look at the candlesticks, again, they're just still red. We need a bigger rally to go back and fill the gap up here to flip the candles back to bullish. You need a bigger rally to happen to see that take place. Now the rally has flipped the cloud. The cloud has flipped back to bullish, but you need to get rid of all this red. You need to get the bars turning bullish. You need to get the trend signals all beginning to turn bullish. Again, the signals turn bearish over here. They've been consistently bearish. Here the cloud flipped with the momentum, but there's still more work to be done, and the rally back up just reaffirmed another bearish signal, at least so far, which we've had the attempt to flip momentum here, and it failed, and the attempt to flip momentum here, and it failed, and reaffirmed the bearish signal from back over here. So if we're going to turn this around, we got to see some green appearing here the bars green and the indicators all turning green. So far, we just have the cloud flipping. Maybe we flip and get it, pull back at a higher low. Cloud remains bullish, but again, if we can rally immediately towards the 200 period, the black line right there, you got to start flipping all these trend signals. Now, again, we flip the cloud. We're trying to flip the momentum here, that record rally, but the bars are still red. So again, gotta start seeing things turn here if we're going to try to flip it right here, right now. But got some bullish signals. Again, if we pull back, we'll see if we get a higher low. S&P is coming right up to resistance here right now. Got to be able to clear this level if we're going to go back and fill that other gap. This is where we stalled over here. This is where we stalled over here, just under this area. Got to get back above the line, flip it to blue, flip the bars back to blue if we're going to turn this around. We got to see signals all begin to turn back to bullish. Right now, they're still bearish. Now, we're seeing some positive things with momentum trying to flip here. The momentum line's turning blue now, and we're getting this little arrow right here. We're trying to rally, but again, we're getting black candlesticks falling near the 20-period moving averages. NASDAQ tested it. S&P is under it. Do what Bitcoin did. If we're going to get a bigger recovery, you got to see momentum go into positive territory here. We did get some of these bullish signals here. We got them over here, but it only marked a counter trend. Now we have it again here. We get this rally, record rally, and we come back up, but the bars are still red. But we're now seeing the momentum line, that little line going from red to blue. So again, that could shift it back in favor of bullish momentum that could carry us higher if we can continue to rally. We've got to be able to get back above 20-period moving averages, back above in the daily time frame, back above the 200 in the 60-minute time frame. Same thing going on with NASDAQ. We're seeing the momentum line turn back to bullish from red to blue here. Got to get back up in a positive territory if we're going to end this and attempt a bigger relief rally to get a reversal. So momentum line turned back to bullish today. Can it remain that way? NASDAQ daily chart here.